Today is Monday, May 28th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Alan, let's start with you this morning. Which futures markets do you feel have the most bullish fundamentals?
Okay, well, there are several. The futures markets that have the most bullish fundamentals and also the most bullish technicals are the precious metals, especially gold and silver, and copper, along with the 30-year Treasury bond futures. So the increasing geopolitical risks with what is happening in the Middle East continue to support gold and silver and the 30-year Treasury bond futures. So those are the traditional safe haven vehicles that are responding as you would expect. So there is somewhat of a different story, however, for the copper futures, which so far this year have increased 25%. This due to copper's key role in electrification, grid-scale energy storage, and data center infrastructure. So the longer-term fundamentals remain supportive, and higher prices are likely for copper. So just to repeat, the markets that have the most bullish fundamentals and technicals are gold, silver, copper, and Treasury bond futures. Any break should be used as buying opportunities.
And looking at the stock indexes, what do the seasonals say about stock index futures for the month of June?
Okay, seasonality for the S&P 500 going back to 2020 shows the S&P increased an average of 1.81% in June, and for July, the seasonality is even better, going back to 2020 with a gain on average of 4.26%. And for the NASDAQ in June, going back to 2020, the average increase was 3.36%. And for July, it was actually up 5.3%. So in the next couple of months, I think we're going to see upward seasonality tendencies for stock index futures across the board.
Lastly, Alan, what economic reports have the most potentially market-moving impact this week?
Okay, Wednesday we'll have the Fed's Beige Book. That is produced by the FOMC and is produced in advance of the June 6th policy meeting. Thursday we'll have the first quarter GDP guessed at up 1.5%. And then on Friday we'll have the April personal income. That's anticipated to show an increase of 0.3%.
Thanks, Alan. Turning toward the grain markets, Mark, what led to the initial surge in wheat prices overnight?
Well, we're really starting to see the impact of drought and frost damage from earlier this month in southern Russia and surrounding countries. There have been a number of lower production forecasts here in recent days, which triggered a gap higher trade here overnight. ICAR, they lowered their Russian production forecast another 2 million metric tons to 81.5. Now, that's down 11.5 million metric tons in just over the past month. Sav Econ this morning also lowered their production forecast for Russia to 3.6 million metric tons to 82.1. Both are well below the USDA estimate of 88 million metric tons from earlier this month. Also in Ukraine, the grain union there, they lowered wheat production 3 million metric tons to 19.2, and they also lowered their corn forecast 4 million metric tons to 25.5, and both are running about 6 to 8% below the USDA forecast. We saw 9-month highs in both Chicago and KC wheat overnight. Minneapolis wheat hit a 6-month high. Higher trade, however, was met with selling here in the U.S., allowing prices to back up as we're starting to see a shift in forecast. Good rains expected later this week in some of the drier areas of the southern U.S. plains, including southwest Kansas. It might be a little too late to salvage a decent hard red winter wheat crop. However, I think it's what's really triggered what's probably a temporary turnaround. Either way, it's triggered a spike in volatility as we'll see U.S. harvest begin to expand here as we move the calendar over to June. Personally, I don't think we've seen a high yet. I got a 775 objective for spot Chicago and $8 for Kansas City.
Mark, traders are watching crop progress closely right now. Where do you see U.S. corn and soybean plantings this week?
Well, despite some healthy rains across the central and eastern corn belt over the holiday weekend, I think corn planting has likely reached 84, maybe 85% as of Sunday. This would still be slightly below the year-ago pace, however, back above its 5-year average. I think plantings likely have reached 67, 68% in beans, so just over 2/3 of the way complete. Similar situation there, below year ago, however, above its 5-year average. And at this point, I don't think the current pace to plantings would translate into a significant change in the acreage mix from what the USDA forecast in March. However, we'll just have to watch this rather closely here in the next couple of weeks to see how the last 15% of corn gets in.
Briefly, Mark, any highlights from Friday's CFTC data?
Yeah, we saw some moderate selling from both the index funds and money managers here in the ag space, and that for the first time in 5 weeks. What stood out to me is in corn, money managers sold 50,000 contracts last week, extended their short position back over 121,000. That's well below the record short of 340,000 just 3 months ago. However, it was much more selling than expected. And in soybeans, the soybean meal, the long position there is now over 100,000 contracts, and that more than offsets the short positions in beans and bean oil. So the net position in the soy complex is net long now for the first time in this calendar year.
Thank you both. Remember, views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.